All right, now all I have to do is find that root beer float to enjoy here on Root Beer Float Day. We'll find out if our next guest is a big fan of the root beer float, but before we get to that, let's get to the markets and the corn market. You know, this market trying to break out of a two-day losing streak, and we're in the negative for the week, we're in the negative really for the month. You have to go year to date to find positive numbers here for the corn market. But do we have room on the upside? 461 and a quarter is where we trade right now with the new crop, penny and a quarter higher. And this is one day after a flash sale to Mexico. Speaking of flash sales, China lined up, took 4.5 million bushels. According to USDA in that announcement this morning, November at 1177 and a quarter, it's 2.5 higher. Wheat market, we're watching it move lower, 635, down 7 and a quarter on soft red. Hard red is down 9.5 at 704. It's the cotton market that's up 4% month over month and 29% higher than where we started the new year. 83.29 on December. It's up 29. Chip Nellinger's owner of Blue Reef Agri Marketing. Okay, Chip, let's talk here about the corn market in front of a WASDE report. What are you watching?
Yeah, just kind of slopping around here, Tony. There's been just enough of rain around portions of the dry areas in Eastern Corn Belt that it's kind of stabilized things. There's people that have missed out on that rainfall. And so now the question remains, what is the crop size going to be? So we're a week away from the USDA WASDE August crop report. Lots of variance of opinions, as there always is. Really, I think we just kind of slop around here, get that report out of the way, and kind of get a better feel for what additional rainfall is going to happen across the Corn Belt here in the rest of the month of August. Weather still matters, but I think we've dropped far enough to find some support here. Demand's still very good on the back end of this thing on corn and beans both.
Well, let's talk demand on the bean side. We mentioned the flash sale, so we know we have export demand here. What about domestic demand and crush? Have you been watching?
Well, domestic demand is on fire, Tony. We have massive profitability in crush margins. This burgeoning, renewable diesel program in the United States has really expanded dramatically the last couple of years. So our domestic demand is record. China's back almost on a daily basis buying our beans. So it's going to swallow up a trend line yield at 53 bushels and not really build carryout. If it's a trend line yield, if it happens to be a touch below, it tightens the carryout. And then we've got all the questions with the Super El Nino as far as the South American production. Can they get enough access to fertilizer into Brazil ahead of planting time there? There's a lot of questions out there, but at the heart of it, demand is massive here domestically, Tony.
Okay, and since you mentioned talking about, Brazil and fertilizer, I'm going to kind of go off script here and take us to look at nat gas. Again, anytime we're talking nat gas on the fertilizer side, we're talking about nitrogen here, but this nat gas market has really been pulling back. What are your thoughts?
Well, I think historically, longer term, there's been a strong correlation between natural gas and nitrogen prices. The problem now, though, is it's more logistic with the Strait of Hormuz still effectively being closed or very little coming out of that area. And of course, a huge percentage of our fertilizer and nitrogen products come out of that area. So it's more a logistical issue. I don't know that there's a perfect one-to-one correlation between natural gas prices and the cost of nitrogen, but maybe it speaks more towards the production domestically of natural gas. It's been very hot this summer in areas, but overall, we've got some cooler temperatures now, and so demand probably is a touch under what you'd normally see here the first half of August to lead to some of these lower prices.
And since we're already here, we're looking at gasoline futures, and this is a market, this RBOB's been lower 5 straight sessions. We've got diesel. Diesel has just really outperformed. It's up 80% year to date. And then finally here on the crude sector, before we go to the break, crude at 77.10. Final thoughts here in the energy sector?
Yeah, still a lot of problems. Obviously, the Iran conflict front and center. We have not fixed those problems. We're drawing down the strategic reserves. That can only last so long. We've got some issues here on the energy production longer term.
All right. We're talking with Chip Nellinger. We'll take a break. We'll be back with more markets on Market Day Report. So we're talking protein sector here. Cash trade 235, 236. Talking about cash cattle, live cattle right now at 233, and that's down 117. The October off 202 at 227.47. Feeders have been higher the last two sessions, but now we're looking at nearly a 1% loss here on the September, down 310 at 345.12. Chip Nellinger's with us. Chip's owner of Blue Reef Agri Marketing. Chip, thoughts here in the proteins?
Yeah, we kind of tried to rally here earlier, Tony, and have reversed. Pretty correlated with the equity market right now. We've had a nice bounce. I think we were due for a bounce here in the both the live and the feeder cattle market. Looks like cash is a little better this week. The boxes have stabilized. I think this is more technical in nature. A little bit disappointing with the action so far. Maybe we went a little too far to the upside too fast. Due for a setback. Let's see where the support comes in. It's still going to be about whether we can stabilize and rally the boxes and the cash market over the next few weeks in here.
Okay, is it one way to look at what's been happening in this bull market that we were in for, well, I can't even remember how long we've had this bull market in the cattle, but do we need to stretch that rubber band from time to time just to figure out where how far that will go?
Yeah, very common, Tony, even in whether it's a raging bull market or a horrendous bear market. No market goes straight up or straight down. You have reactions, you have people hedging it, you have people taking profits on longs. So it is very healthy to see these, but it's not in a vacuum. You still have to kind of gauge where we're at. And we have had, arguably at least a 3-year bull run in cattle. Some could say it's probably closer to 5. And nothing's really changed as far as the supplies go, but that does not mean that things won't change going forward, and we have to keep going straight up. So to your point, I think we need to keep this in the back of our mind, see how we act on this setback. If we can't hold support, that's a sign in itself, and we shouldn't stick our head in the sand thinking that we're going to go to new all-time highs because the fundamentals haven't changed. Technicals change faster than fundamentals oftentimes.
And then we've seen pressure here in the hogs as well. Have we just run out of steam in the hog market here? Have we just run out as we're getting to the end of summer?
Well, Tony, the seasonals haven't worked, or it's actually been opposite what the normal seasonals have been in hogs for the better part of a year. So typically we would be coming off of a price peak in summer, and now kind of selling off into that third and fourth quarter on lower demand and higher supplies. This is so backwards. I'm not sure. We've seen some stability here. It's very strange. We still have cash and cutout north of $100 in August. So we'll have to see. I mean, if we get back to the seasonals, then things probably don't look too rosy for the hog market going into fall here. But we haven't followed those seasonals, like we normally would for the better part of a year. So you have to be on alert for some volatility here.
Well, and if you're watching the screen, no surprise, I'm taking you to the precious metals to wrap it up. Gold and silver, gold 2-day run higher. We're trying to make it 3. And silver trying to push higher for the 4th session. Final thoughts?
Yeah, again, I think this is a good bellwether. What's going on in the economy, the interest rate, the equity markets, a lot of that's going to be played out in our precious metals, gold and silver. So it's been a brutal setback after a big bull market, much like the cattle complex we talked about earlier. So it'll be nice to see how this setback is handled by the market. If we can build on these gains and maybe talk about a longer term bottom being in place, that could help all commodities if the metals are forming a bottom in here.
Well, there you go. And before you go, how about a root beer float? Fan?
Big fan, Tony. Love root beer floats.
All right, go enjoy your root beer float on National Root Beer Float Day. I have to stop and enunciate.
It's a mouthful, truly. But do you love a root beer float?